transparency with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Thanks for tuning in today. Financial Issues is a ministry, and our goal is to help to educate people about financial issues from a biblical worldview. You know, when your context is right, your conclusion will be right. So we try to help ground you in the Word of God so that you can navigate the news, specifically the financial news that is happening around us from a biblical worldview. For just $132 a year, you can become a partner of our ministry, and we hope that you will. When you do that, you will get access to our biblically responsible investment strategy that we call Defunding Darkness. We help you to screen out companies who are using shareholder dollars, which you have claim to when you buy their stock, and we screen out the companies that are using those shareholder dollars to fund dark agendas like abortion, pornography, the LGBTQ agenda, human rights violations, and so many other things that grieve the heart of the Lord. We do not want to be investing God's money in things that grieve His heart. So consider becoming a partner today. You can find out more information at financialissues.org. Our phone lines are open. The phone number, if you want to call us, if you're listening to the live program, which happens at 9 a.m. Eastern Time, Monday through Friday, you can call 610-363-1110, and you can ask us questions. You can ask us things about biblically responsible investing. You can ask us things about what's happening in the economy, which direction, because if you listen to financial news out there, you can hear opinions of just about every flavor. You can hear arguments for both sides of the coin. Give us a call, 610-363-1110. And, you know, all of the things that we think about are reflected in our investment strategy. So if you're a partner, you have a really good glimpse into how we view the things that are happening. Let's get to some economic news. Well, a couple of weeks ago, the market had a little bit of a shakeup because the Chinese company DeepSeek became the number one downloaded app on the Apple App Store, and that is the Chinese company's version of AI. They released an update to their strategy, and the big news wasn't that they have a competing product to some of the U.S. products. The big news was that they said that they could do it better, cheaper, and with less energy. So my first reaction to the notion that DeepSeek had released this better, cheaper, and more energy efficient version of AI was that something just didn't smell right. And I suggested that DeepSeek could be a deep fake, not necessarily the product itself, but the claims that China was making about its competitive position to the U.S. So it turns out I was right, or at least not the only one who is in that camp and thinks that communist China can't totally be trusted in what they say. Google's AI chief, who knows a lot more about technology and AI than I do, has described the notion that DeepSeek spent under $6 million, which was what DeepSeek claimed, to develop their AI system as exaggerated and a little bit misleading. He didn't exactly call it a deep fake like I did, but he noted that the figure that they gave of less than $6 million to develop their version of AI reflected only a fraction of the total cost. So recent analysis suggests that DeepSeek's actual expenditures for developing its AI models are significantly higher than the $5.6 billion that they said that they spent. The $5.6 million figure appears to account solely for the final training runs, computational cost, and it doesn't even include how much they spent in research and development. data acquisition, personnel, infrastructure, and all the rest. So industry experts estimate that when considering all of these additional factors, DeepSeek's total investment likely exceeded $1 billion. So they kind of do U.S. government math when they were coming up with their estimates. So reports indicate that DeepSeek acquired approximately 50,000 high-end GPUs, which alone would represent a substantial financial commitment that really cast shadows of doubt on that total cost of $5.6 million. So DeepSeek's advancement in AI are noteworthy. I mean, and China should be considered a noteworthy competitor in the AI race. We can't count them out altogether. They do a really great job of reverse engineering and stealing intellectual property. So not exactly the most honest way to be a formidable competitor, but they are formidable competition all the same. The portrayal of its development as being achieved with minimal financial investment does not capture the full scope of resources that were likely involved. Well, Jay Powell was on the Hill yesterday and today giving remarks to Congress. So far, there has been nothing really new in his remarks. He just reiterated what he said in the FOMC statement and press conference that happened at the end of January. He said, quote, "With our policy stance now significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry or to adjust our policy stance." So markets took heed of what Powell said to Congress yesterday, and money markets continue to fully price in just one more 25 basis rate cut by the Fed this year, now pushing back from June to September. So in December of last year, two cuts were priced in 2025, and now that's going down even further. Be interesting to see what he says today, if he says anything different once he has the most recent inflation data. The NFIB Small Business Optimism Index came out earlier this week, and I think we have a chart to put up on the screen there. In the afterglow of Trump's win, the National Federation of Independent Businesses, they do a small business optimism survey once a month, and in the afterglow of Trump's win, the Optimism Index received very optimistic responses from small businesses in November and December, posting reads of over 100 for the first time in a really long time, almost back to when Trump was last in office. So November had a read of 101.7, December had a read of 101.5, and the Optimism Index shrunk back a little bit for January to 102.8, though it's still well above the 93.7 where it stood when the outcome of the 2024 election was still up in the air. So during Trump's first term, and you can kind of see this on the chart there, this goes back, I believe, 10 years. So we're going to see where optimism went really high, where you see that peak there. That was the first term Trump. And then you see that we've been really pessimistic, or the small business community has been really pessimistic during most of Biden's term. And then you see it shoot back up there after we know that Trump won the 2024 election. During Trump's first term, optimism stayed pretty well over 100, which is the key mark for optimism versus pessimism. And with the exception, of course, of COVID, the highest read on the small business optimism scale during the Biden administration was June of 2021, where optimism, the Biden administration had just begun, and optimism for small businesses was at 102.5. And that was prior to the realities of Bidenomics actually setting in. By September of Biden's first term, optimism turned to pessimism after the reading didn't get over 94, which, remember, under 100 is pessimism, until November of 2024 when Trump won. So among the pullbacks in the NFIB read this month that stands out to me was a 7-point drop in the increased capital spending category after the jump in the prior 2 months. The average rate paid on a loan taken by small businesses was 9.4%, higher than the 8.7% that was the norm in December, the previous month. So this illustrates just how restrictive the Fed's rate hikes and quantitative tightening has been on the small business community. For perspective, the small business average cost for borrowed capital was only 6.2% over the last 20 years. So that represents a big difference. Well, we got to take a break. Got more to say on this topic and a few others, so we hope that you're going to stay tuned. Our phone lines are open. You want to get your call queued in, you got to call now. 610-363-1110. It's you first place.
How is Timothy Plan continuing to lead the fight as you guys now enter your 4th decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
Would you join Financial Issues and Preborn as we celebrate heartbeats? Your tax-deductible donation of $120 or any amount will provide free ultrasounds, counseling aid, and the gospel message to a mother in an unplanned pregnancy. Become a heartbeat hero and give monthly to save lives over and over again. To donate, dial pound 250 and say the keyword baby, or go to financialissues.org and click on the Preborn banner.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues, 610-363-1110. If you're listening to the live version of the show, we'll get you first place in the call queue. And if you want to get your question in today, you need to call now, 610-363-1110. I wanted to continue my thoughts on some of the economic things that are happening in the markets and the economy. We were talking about the National Federation of Independent Businesses Optimism survey right before the break, and I just wanted to kind of sum that up there. The bottom line was this is what the quote that the NFIB put out. Overall, small business owners remain optimistic regarding future business conditions, but uncertainty is on the rise. Hiring challenges continue to frustrate Main Street owners as they struggle to find qualified workers to fill their many open positions. Meanwhile, fewer planned capital investments as they prepare for the months ahead. So, Perhaps the talent pool will widen for small businesses, because in this environment where, President Biden ran victory laps about all of the jobs that his administration created, the majority of those jobs that were created were in the government sector. So the government, with all of its trillions of dollars of resources, were competing with small businesses for employees. And, small businesses just don't have the kind of resources that, big companies and even bigger government has to attract employees. So I suspect that with the government payrolls likely to be shrinking as DOGE does its work and President Trump hands out pink slips, I suspect that some of those workers will probably permanently exit the workforce altogether. I suspect that there are some who are on the verge of retirement and 9 months severance, getting paid to basically do nothing, will help them transition into the sunset years of their retirement. Hopefully they've saved enough money to get them through and stay ahead of the high inflation that we've had and that is currently sticking around a little bit. So I suspect that some of those workers will permanently exit the workforce, and some will probably have to be retrained to learn real-world skills that can meaningfully contribute to the success of organizations like small businesses or mid-sized or large businesses that do. Some of these employees that do little other than hassle and burden taxpayers. They're going to have to learn some real skills to be productive in the private sector. Inflation. So the numbers for inflation came out this morning. See if I can get to see where the market's moving, just as I suspected. But the read that came out this morning was not what was expected. It was much hotter than what was expected. The markets are reacting on both sides, the stock markets and the bond markets. Before this number came out, my thoughts were that the next month's read is going to be more important because it happens, we get a whole new round of inflation data next month, right before the Fed makes their interest rate decision. So this is the data that the Fed says that they are most dependent on. So we'll see what happens there. So what happened in the market, or what happened with inflation this morning? CPI, which is measures the rate that prices are increasing. The headline number includes just about everything, food and energy included. It was expected to come in up 0.4%, means that prices are increasing month over month by 0.4% to an annual rate of 2.9%. Well, it came in much hotter. Instead of 0.4, it came in 0.5% higher month over month, which brought the year number to 3% instead of 2%. So we've seen this reigniting of inflation. Core, which excludes food and energy, came in higher as well. It was expected to come in at 0.2% higher month over month to an annual rate of 3.2 versus 3.1 the previous month. It actually came in 0.4% higher month over month, and 3.3 is the year over year number instead of the expected 3.2. In response to that, stocks headed sharply lower, and the Treasury yields began ticking up. That is still what's happening. Yesterday, stocks ended in mixed territory, waiting for this data to come out. The Dow was up a little over a quarter point yesterday. S&P hovered around the flat line, and the NASDAQ was actually in negative territory by 36 basis points. The pre-markets this morning are all indicating an open of at least 1% lower on this inflation data. So the Fed is going to be in a pickle. The Fed has a dual mandate for price stability, meaning keeping the prices that people pay for goods and services increasing at only a slight level. Their target is 2%. We're still above that. We've been well above that for the last several years. And so the Fed is going to be in a pickle because rising inflation means that interest rates should be increased rather than decreased. We began a cutting cycle in September of last year with a big 50 basis point rate cut. And the Fed's expectation that rates would be cut 100 basis points this year. That's shrinking back quite a bit. The Fed's other mandate is unemployment. Unemployment rising, which would happen if there are massive government layoffs, even though they would be delayed by these potential severance packages. That would mean that the Fed needs to cut rates. So you've got two mandates. You know, your data on one says raise rates. The data on the other may be saying cut rates. So it puts the Fed in a very hard predicament. I'm very intrigued by recent comments made by Trump and new Treasury Secretary Scott Bessent. Bessent said that he is considering monetizing some real assets on the balance sheet of the U.S. government rather than just monetizing debt that is based on the full faith and credit of the U.S. government paying it back. Interesting concept. Also, President Trump made some comments earlier this week about the percolating problems in the Treasury market, seeing Treasury yields going higher. He suggested, without giving any detailed explanation, as Trump often does, that perhaps we don't have as much debt as we thought. Well, that would be good news, I guess. But what does he mean by that? Well, some hedge fund managers, which, by the way, Scott Bessent comes out of that community of hedge fund managers, are speculating that America may revalue our gold. Debt potentially backed by something real, like gold. Hey, there's a novel idea that we haven't
used to do that once
that we haven't liked since 1971. Right. Now, it wouldn't be all the debt, but I mean, this is just interesting concept to me because of for these reasons. But the U.S. Treasury right now values its gold reserves at $40 per troy ounce. That was a figure that was set in 1973. So, you know, a balance sheet shows the current market value of all of your assets. Given the U.S. gold reserves of 261 million troy ounces, the balance sheet value should be much, much higher at that. It should be $755 billion versus the $11 billion that it's showing on our balance sheet if we use today's gold prices. So the discrepancy exists because the U.S. government does not mark its gold reserves to the current value. So if that happens, that's what Trump means. It's sort of like finding out that, or I guess it's the equivalent of finding out that your the home that you purchased in 1973 for $30,000 is valued at $427,000 today. That was the median home price in 1973 versus today. And then, you know, going to get a home equity loan based on that value. So what it does is it gooses your balance sheet in a way. So this could potentially, if they revalue that, this could potentially bring $700+ billion into the coffers without doing much else. So, you know, these are the kind of things that happen, the things that we are seeing now. I mean, there's so much. I mean, it seems like President Trump has been in office for 3 years versus 3 weeks based on all that we have seen come out of the administration. I would suggest that he's done more in his few weeks in office than most presidents get done in 2 whole terms. But this is what happens when you trade in DEI for MEI. So DEI, diversity, equity, inclusion, that we're finding out from Doge that the U.S. government has spent billions of dollars for that agenda alone. MEI would be meritocracy, excellence, and intelligence. So when you hire people based on meritocracy, regardless of their color, gender, or sexual orientation, which, by the way, in case you didn't know, Scott Bessent is openly gay, you end up with diversity in the workforce, and you end up with excellence. So when you hire based on merit versus defined quotas, you're going to end up with some good things. Now, of course, we should pray for Scott Bessent that he comes to know the truth about sexuality and turns and repents from his ways and calls on the Lord for repentance, for salvation, if he hasn't already done that. Because, we love all people, regardless of their sin, because we all have them. So, well, gosh, I had more to say about that. We've got this big, beautiful bill, as Trump calls it, for funding the government that is needing to get done, and done pretty soon. So many things happening in the markets, in the economy. If you want to know more about our strategy and get the inside scoop, become a partner. Go read the partner commentary that is posted weekly. If you're listening on an outlet that only carries the short version, we wish you a good day. For everybody else, hang around. There's more financial issues come right after this.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of, this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
Did you know that an unborn baby's heart will beat an average of 120 times per minute? That precious sound is the sound of life. This Valentine's month, would you join Financial Issues and Preborn as we celebrate heartbeats? Your tax-deductible donation of $120 or any amount will provide free ultrasounds, counseling aid, and the gospel message to a mother in an unplanned pregnancy. Become a heartbeat hero and give monthly to make an impact and save lives over and over again. To donate, dial pound 250 and say the keyword baby. That's pound 250, baby. Or go to financialissues.org. That's financialissues.org and click on the Preborn banner. Become a heartbeat hero and give monthly to Preborn as they seek to save lives.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
Folks, welcome back to Financial Issues. I'll be taking you the rest of the way here. Seth Udinsky along with Sam Case and the Studio A team here. Of course, we also have a very special guest joining us right now, and I'm not going to waste any more time with an introduction. We're going to get right to it here. You know her and love her. Twila Brase is the president and co-founder, CCH Freedom. If you're new to our program, Twila is a recurring guest and a dear friend of ours, and we love every opportunity we get to have her on. If you're not new to the program, then you'll know Twila very well, and I'm sure you're excited to see her. Twila, it's great to have you back on with me. Thanks for joining us today.
Well, it's always great to be here. Thanks, Seth.
Yeah, you're very welcome. Let's kick it off by discussing a topic that I think might be unknown to many in our audience. If I remember correctly, at our last interview last month, we maybe hinted at it a little bit, but it's this idea of real ID. Can you tell us about this? If you're listening to the show and you hear something like real ID, that probably doesn't sound too dangerous. It might sound rather benign. But tell us a little bit about this. What is this idea of real ID, and what do we need to know about it?
Yeah, so your listeners right now, if they're close to their, purse or their wallet or something, can pull out their ID card and see if they've got a real ID, because a lot of them don't know that they do. So Real ID is actually a federal program, a federal ID, a national ID program, and it's a system. It's not just a card, it's a system. And it is the usurpation of states' rights, and it's a violation of privacy rights, and it means that you are under federal control rather than state control. Now, to just give a little bit of a history of this, if I may, in 2005, this happened sort of in the middle of the night on a bill that had the word tsunami in it. It was about national crises, but it was the middle of the night, and Senator Lamar Alexander from Tennessee actually said, this is a national identification card. We haven't talked to the public about this. I don't know if we should be doing this. Right? But they did it anyway. And then states, when the first rule came out that told states that they had to comply, 37 states either wrote laws against it or resolutions against it, because they weren't about to comply with this usurpation of states' rights. But then in 2016, Obama came out with this clever statement: you can't fly without real ID. And constituents started to call their state legislators, and the legislators didn't know what to do, and they thought it was true, and it wasn't true. And so they started to cave, and they started to comply and write laws that would comply with the federal law. And now, across the country, 56% of all driver's licenses and IDs are real ID compliant. That means 44% are not. And because it is a federal takeover of all identification and the ability to fly, et cetera, we are calling on people not to take the real ID. And instead, if you're worried that our organization, we are the lead organization against real ID, if you think we're not going to be successful, get yourself a passport with a passport card, but refuse to get the real ID. Because I think the one thing people don't understand about the real ID is, one, it's federal, and two, it gives the Secretary of Homeland Security sole authority to decide what it has to be used for. So today the law says for entrance to certain federal buildings, nuclear facilities, and commercial airlines, and any other purposes for which the secretary shall determine. So from our perspective, that's going to eventually be no card, no care. And we don't want them to get to the tipping point. And they have now come out with a new regulation to start on May 7th, which we are trying to kill at the congressional level, a regulation that would start progressive enforcement to get you to comply to this national ID. And so we are, all hands on deck, to try to stop what is going on here.
Absolutely. Twila, before I ask you about how our listeners can be a part of this, let me just ask you this. If someone is listening to the program today and they pull out their wallet, they pull out their driver's license, and they realize that it is a real ID card, is there anything that they can do? Can they go to their local DMV and request a non-real ID, or is it basically at that point, it's kind of over? There's really no going back?
No, there is going back, and that reminds me that I didn't actually tell people how you would know whether you've got it.
Yeah, please.
Look for the star. the gold star, the white star, the black star. In California, it's got a bear with a star in it. In Oregon, it's got a tree with a star in it. But most everywhere else, it's like a circle with a star inside. That means it's a real ID. There are only 5 states that require a real ID instead of a standard driver's license. And so we encourage everybody to go back to their, you can just say you don't want a real ID anymore. You want a standard license and just pay the extra money it's going to cost you to do that. But, our plan is to move from 44% of IDs not compliant to 46 and then 48 and then 50 and 55, because we know that what this is. And the interesting thing about this that people don't realize is this is moving towards the Chinese social credit system.
Yeah.
In December 2023, the Organization of State DMVs testified to Congress in testimony that they called Beyond Real ID. And they talked about putting it on your phone, digitizing it, putting it on your phone, and having remote real-time access to it, which means that they could shut it down anytime you did something they didn't like, right? It could become tracking because it's digital. Everyone, if you look at the airport, you will see that they now have signs on that say, we accept digital ID on your phone. So the entire movement here is towards digitizing your ID, putting it on your phone, which is your personal phone, but the government having control of what you can and cannot buy and where you can and cannot go, all through Real ID. And so there is a coalition now of state legislators that are writing bills to repeal conforming with the federal law. And we encourage you to ask your legislator to do that. And if you do have a legislator like that, we can certainly add them to the coalition and just let us know. And the other thing is that for the first 60 legislative days of Congress, they can do what's called the Congressional Review Act bill. Really simple. And they can just get rid of really recent rules. So this progressive enforcement rule, they want to do 3 strikes, you're out at the airport, send you home at the 4th time. So again, this is unconstitutional.
Big time.
Right? So you can contact your members of Congress and say, I understand you can stop the Real ID rule, the progressive Real ID rule in the next 60 days. Please do so. Just bring that to their attention, that you're upset about being forced into Real ID, turned away at the airport. And please, anyone who's worried that we aren't successful, just get yourself a passport and a passport card. You never know when you're going to want to leave the country, right? Yeah. And make sure that you have something that makes you feel comfortable, but don't get the Real ID, because they just want to get to a tipping point and then force all of us into it.
Twila, thank you so much for bringing this up to us. Now back to the other question that I had asked earlier, or was going to ask earlier, about what you guys are doing specifically. How can our listeners, also what you had said about asking your, leaders to be able to fight against this. What can we do to join CCH Freedom to be able to, fight against this as the clock is ticking? As you said, I think May is not too far around the corner right now for this. What can we do?
Well, yes, May for the progressive enforcement, March for getting the Congressional Review Act actually passed. Yep. And so now is the time to contact your members of Congress. If you want to stay alert to what's going on and how you can engage, we are looking at some creative strategies, and we'll announce them in our email. And so we only do an email once a month, unless there is a special alert. And so if you just go on our website, cchfreedom.org, and at the bottom you can sign up for our email. And of course you can engage your state legislators to write a bill to refuse to comply with Real ID, to back themselves out of it. We need to back ourselves out of it, because we're really moving to digitize everything, which is really a surveillance net. It's a digital net of control by the federal government. And I don't know that Kristi Noem is, I don't know what she's going to do as Secretary of Homeland Security, but we will try to get her to also back out of that. But I have no idea what her position might be.
Twila, thank you so much. Sorry, go ahead.
I will say that Senator Rand Paul had a bill in 2017 to repeal Real ID, and we will be working to try to make that happen as well.
Good. Awesome. Twila, thank you so much for bringing this up to date. I see several people on the chat saying that they have some form of a star on their ID. That's really the clue, right? If you have a star on your ID, whether it's, different state might have something a little different. That's the key to know that you have that real ID, and maybe consider going and getting a non-real ID.
And it will say not for real ID purposes or not for federal identification purposes. Do not be worried. Get yourself your passport and you will be covered no matter what. But just don't get the real ID.
Yep. Awesome. Twila, you are the best. We appreciate you so much looking out for us in all these ways. Folks, I hope that you can see how this is not merely a health issue, as Twila mentioned. This is a constitutional issue, which means it will impact your ability to travel and also your ability to potentially purchase things as well. It's a financial issue too. Twila, we appreciate you so much. Once again, folks, cchfreedom.org is the place to go. cchfreedom.org. Twila, I'm bummed that we have to close this interview down. I always enjoy having you on, and I'm looking forward to the next time already. Can't wait to have you on next time. Folks, we got more financial issues coming up right after this. You don't want to miss it. Stick with us. We'll be right back.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
This Valentine's season, we invite you to join Financial Issues and Preborn in a mission to save babies and transform lives. Your donation of $120 can make an extraordinary difference. This amount represents the average number of times an unborn baby's heart beats in a single minute. To donate, dial pound 250 and say the keyword baby, or go to financialissues.org and click on the Preborn banner.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachOurschools.com. That's reachOurschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, we appreciate having Twila on so much, and I just wanted to mention this here. Normally, we would have the Ag Report in this segment, but we're going to push the Ag off. You can find the Ag Report on the app, the FISM app. You told me during that break there. She's having a Facebook Live event tonight on the Citizens Council for Health Freedom Facebook page. So if you are Facebook, I know we have a big Facebook audience here. Many of you are watching right now. Go to the CCH Freedom Facebook page tonight. I'm going to put a link in our chat right here. So I'll go ahead and do that right now, so that way you all have that. But if you're on Facebook, make sure that you join that tonight. Twila's going to explain more about this, because I know there's a lot of questions, about this stuff here. This is obviously pretty serious stuff, but hopefully you all were able to get your questions answered there as best as we could. When we have Twila back on the next time, we can do a follow-up with this also. So I'll probably send a reminder out maybe the day before, or maybe a couple days before we have Twila on again. If you have any questions for her with a follow-up from this Real ID conversation, please get them in, because this is really important stuff here, folks, and we want to make sure that you all are as prepared as you can possibly be for that. So again, if you are on Facebook, if you have a Facebook account, go to CCH Freedom, their Facebook page, CCH Freedom. I believe they follow Financial Issues and we follow them too. So you can also look in our follows as well on Facebook. CCH Freedom's Facebook page tonight, and you can get the time for that live stream that Twila is going to do. My understanding is she'll probably be able to go into a little more depth than she was able to during our interview here, because we had such limited time. But yeah, make sure that you go ahead and do that, folks. Check that out tonight on the Facebook page for CCH Freedom. And of course, if you want to learn more about this, just go to cchfreedom.org in general to get to learn more about it. So that's great stuff. And we appreciate Twila coming on so very much. So once again, the Ag Report, we're going to push it off today because we got a lot of things to talk about. So the Ag Report will be on our website. It'll be on the app as well for our farmers and ranchers. Make sure that you listen to that as well. But for right now, Sam, let's get to what's going on here. Shana had mentioned this earlier in the show, and I think it's good for us to talk about it now. The big news yesterday, of course, was Jerome Powell's testimony in Congress. And so we got a lot to talk about there, man. What do you got for us?
Yeah, let's just break down what went down yesterday. So Fed Chair Jerome Powell, he testified before the Senate Banking Committee yesterday, where he said the economy is strong overall and has a solid labor market, but said inflation is still above the Fed's 2% goal, saying that he doesn't think the Fed is, quote, in a hurry to adjust interest rates anytime soon. And we do have a clip of him talking about that.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment.
So there was the Fed chair basically reiterating what he's been saying for the last couple of months, that he says that, you know, the economy overall is heading in a good direction, but we don't want to mess things too up by changing the interest rate. So what do you think, Seth? Are the markets looking too happy about that?
You know, it was interesting, Sam. Yesterday, I was actually very... I guess the word would be proud. I was proud of the markets for not overreacting yesterday. They're overreacting today. They are overreacting today. But yesterday, dude, it was quite impressive, actually. So let me just give you a taste here, Sam, of what happened. So investors were confused what to think yesterday. By midday, they were just unsure. They were considering what Powell said during his congressional testimony. I would have thought that him saying that there's no rush to cut interest rates, that just seems like it would send the markets in a tizzy. And it didn't yesterday. By late afternoon, same deal, surprisingly. Sam and I, we were talking yesterday just how impressed we were. It was kind of like a teenage girl taking a breakup in stride. Like you would expect kind of a firestorm, and sure enough, it wasn't. In the last hour of trading, actually, 2 of the 3 major averages were in positive territory, and that's where they finished. The Dow Jones finished yesterday up a quarter. The S&P 500 was barely above the flat line. The NASDAQ was the lone loser, but it wasn't bad. It was down about 0.3% or so. So that was kind of what it looked like yesterday, Sam. Again, I was very impressed. I was very impressed with the markets.
Yes. So. No, me too, because despite this being well known that this was what Fed Chair Jerome Powell was basically going to say, the markets have a tendency to, no matter what Fed Chair Powell says, reacting to it as if it's a brand new thing. So I too share your surprise at how the market reacted to that.
Yeah, for sure. Now, Sam, there is an interesting aspect to this, which again, Shana mentioned in the first part of the show. You folks can go back and listen to it in the first 2 segments. It's the relationship between Powell and Trump. And Trump's stance on this, it seems to continually be changing, perhaps by the day. What can you tell us about this?
Trump is in quite the flip-flop with this. Initially, when Fed Chair Powell first announced that he was keeping interest rates the same, he said, no, I want them to go down. And then he changed his mind a little bit and said, actually, that's a good idea. Now he's changing it yet again. He says, in order to implement my tariff policy, we need to have lower interest rates. Meanwhile, Scott Bessent, Trump's Treasury Secretary, he's saying something a little bit different. He says, yes, we want interest rates to go down, but he says what we're more focused on right now is lowering the 10-year Treasury yield. That's something he talked about on Fox.
The president wants lower interest rates. And what he sees, in my talks with him, that he and I are focused on the 10-year Treasury and what is the yield of that. So the purpose of lowering interest rates is to lower interest rates. The Federal Reserve, and I will only talk about what they've done, not what I think they should do from now on. They did a jumbo rate cut, and the 10-year rate went up. Now I've seen this year, despite the growth estimates going up, 10 years coming down, because I believe the bond market is recognizing that, as you and I talked about, energy prices will be lower, and we can have non-inflationary growth. We cut the spending, we cut the size of government, we get more efficiency in government, and we're going to go into a good interest rate cycle.
Probably smart of Bessent there to say I'm only going to react to what the Fed has done instead of what I want them to do, because Donald Trump isn't even really sure what he wants them to do.
Yeah, absolutely. And even, Sam, I am sorry if you had mentioned this right before that clip there, but we did see, so Trump was praising the Fed's decision to keep rates in place, and then this morning he reverts back, and now he's saying we need lower rates. I just find it so fascinating. This is such a dance, all of it, isn't it? It's such a dance. It's a little bit of a power struggle between the Trump camp and the Powell camp. Powell, who, by the way, Trump appointed, let's not forget, 7 years ago now. It's all of it is just so fascinating, folks. But, here's my thought with this, Sam. It's hard to trust the Federal Reserve. It really is. It's hard to trust. And I'm not even saying from a standpoint of they're nefarious or anything like that. I just think sometimes, Dan used to warn about this all the time. They're leading from behind. They're reactionary. You have to remember, this was not that long ago. I think it was last year, Sam. They were predicting something like 4 rate cuts this year, 4 or 3 rate cuts next year, and then 1 or 2 more the following year to get back to that 2% number. It was last year that they said this. That was not that long ago. It just reiterates everything Shana has said these last really 2 years, that when the Fed talks about getting back to this 2% goal, this is a pipe dream. It's just a pipe dream. It really does seem like that. And it seems like it's going to be a much longer road than the Fed had predicted, and perhaps than the markets would like. Sam, speaking of the markets, Shana did mention the pre-markets earlier. With everything happening, you'd expect the markets to really just be struggling today. All 3 major indices currently are down. For what it's worth, they're not as it's not as severe as they were in the pre-markets. Right now, the Dow Jones is down about 0.4%. The S&P 500 is down only about 2/3, and the Nasdaq Composite only down about it's under 0.5%. It's down about 0.43%. You heard Scott Bessent mention the U.S. Treasury yield. The 10-year Treasury yield obviously is up. Shana mentioned after that hot CPI report. Right now, it's hanging right around 4.65%. So that's where the U.S.
And to be clear, Seth, for people who missed the first half of the show, probably that market reaction isn't coming from the Fed. It's rather from that hotter than expected inflation report we were talking about.
That's exactly what it is. So we'll see. Powell is expected to give more testimony today. I'm sure the markets will be looking at that, but understanding that there is the CPI report to consider with that as well. We'll have to see what the markets do today. But folks, that's what's happening here. Listen, we want you to be up to date on what's going on in the markets for sure. At the same time, we want you to be confident in your strategy. If you looked at every little piece of news, like today we're getting a lot, and don't forget we have earnings reports coming out as well, you could be tempted to be swayed one way or the other pretty easily. We're trying to help keep you grounded here, folks. All this stuff that's happening, some of it's gobbledygook, some of it's a little bit important, but none of it is going to shake your strategy. That you're in this for the long term. You are trying to build a good, solid portfolio in biblically responsible companies, and that's really where we're at here with this, folks. So I hope that can be encouraging for you as we're bringing all the news headlines to you. Folks on the chat, I appreciate you all so much. Thank you for the encouragement. Many of you, again, had asked questions about the Real ID stuff that we talked about in the last segment. I'm going to try to compile some of these here, and for the next time Twila's on, we'll ask some of those questions also. I do also want to give a shout out to our Facebook crowd. Philip saying good morning. Alejandro saying good morning. I can't see some of the rest of these here. Let me try to scroll up and see if I can see these. Leith and Mark, good to see you all. So thank you for those of you joining there as well as on Rumble and YouTube. We appreciate all of you so much. Quickly here, folks, before we sign off, We'll keep an eye on what's happening in the markets today. You got to remember tomorrow morning, folks, right at 9:05 Eastern Time is the best time to call. Shana will be live, and you got to make sure to get your calls in right away. 610-363-1110. Again, that's 610-363-1110. Also, there is a fresh commentary up. Shana posted it, I believe, 2 days ago, so make sure that you read that. That gives some really good insight on what's happening here right now, as well as for our strategy. So, partners, if you haven't got a chance to read that commentary, make sure to do it. Folks, with all this stuff we're talking about, remember, everything you have belongs to the Lord. It's all His. Take great comfort in that. It all belongs to Him. Let's be found good and faithful. Steward.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.